Alright, hi guys, this is Adam Khoo here, and in this video I'll be talking about the fear that a lot of people have, which is the fear of a stock market crash. You know, everyone can build a multi-million dollar fortune in the stock markets. Everyone can achieve financial freedom, financial security through this great money-making machine known as the stock market. But very few people do, because a lot of people don't even get started. They don't even get into the markets because of this irrational fear that the stock market is going to crash the moment they get in. And like I said, the word is irrational fear. Now, if you look at the word fear, F-E-A-R, it stands for false experience appearing real. And this happens in every aspect of our life, right? So if you have this fear of getting your heart broken, you'll never find the person of your dreams. If you always have a fear of rejection, you'll never be able to close a sale. If you always have a fear of failure, you'll never start and build a successful business. Now, I don't blame people for having this irrational fear, because everywhere you look in the media, whether it's social media or mainstream news, they tell you the market's going to crash this year. So for example, if you just go onto YouTube and look at most of the other channels, what do they tell you, right? 2020 second market crash. This guy is saying that, right? The crash is coming, prepare for the stock crash of 2020, Endgame, Avengers, right? The upcoming stock market crash of 2020, JP Morgan warns of a planned stock market crash, blah, blah, blah. And again, if you look at the mainstream news, this was one that just came out. It comes out every single year, right? This was Market Insider. Stocks could fall 40% in a collapse mimicking the Great Depression, famed economist Gary Shilling says. And this was just July 6th, a couple of weeks ago. So if you keep reading these headlines on YouTube, on the news, you can get freaked out. You're never going to start investing. You're never going to stay in the market long enough to build your financial fortune. As many of you know, I've built a multi-million dollar fortune investing in the stock markets over the last 29 years. I started investing at 17. I'm 46 this year. It's been 29 years I've been in the markets. And being in the markets for almost 3 decades, I went through the dot-com crash in the year 2000, right? I went through the great financial crisis in 2009. I went through a flash crash in 2015. I went through a bear market in 2018. And most recently went through the COVID-19 bear market crash in early 2020. And despite all those crashes, I've only gotten more and more wealthy. I've gotten richer and richer in the markets. And the reason why I've been able to hold all the way through those events is because I have got no fear. I've never had a fear of a stock market crash. Never have, never will. Now, it's not because I'm an optimist. It's not because I think it's never going to happen, because it happens once in a while. It happened to me 4 to 5 times. But the reason I have no fear of a stock market crash is because I'm a realist and I understand the facts. So once you understand the facts of when a crash happens, how often it happens, you have no more fear. And once you have no more fear and you free your mind from the matrix of the markets, that's when you build your fortune. That's when you achieve the financial freedom and financial security you deserve in the future. So what are these facts that you gotta know about the markets? Let's run through these facts right now. Fact number 1, the stock market always goes up in the long run. So you always win if you hold long enough. And again, I'm only referring to the index and high quality companies. Now, if you take a look at the Dow Jones, for the last 119 years, that's over 100 years, right? From 1900 to 2019, right? The Dow started at about 70 points. And in the last 119 years, it's now at 27,000 points. This is regardless of 2 world wars, a Great Depression, an oil crash, a Black Monday, dot-com crash, financial crisis, European debt crisis. And no matter what happens in the world, it will always go up, right? And the stock market in the long run goes up roughly between 8% to 11% a year on average, right? So depending, but 8 to 11% on average, which means that in about 12 to 15 years, the Dow Jones will be 100,000 points. That's right, from 27,000 points today, it will be 100,000 points in 12 to 15 years. Now, of course, it's not going to go up in a straight line. It's going to go up and down and up and down. But it will eventually get to 100,000 points, 200,000 points, 300,000 points. So when you know that the market will always go up eventually, it will always go up if you hold long enough, there's no more fear. Again, provided you hold great quality companies or you're holding the index ETFs. That's fact number one. Fact number two is that the US stock index makes annual gains 74% of the time. Now, if you take a look at this table, this was back from 1951 to the year 2019. This is 2020. It's not over yet, so we can't be the judge of the returns this year, right? So you can see that in the last 69 years, how many years ended with a loss in the markets, right? If you count the number of years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 18 out of 69 years ended negative. That's 26%, right? 51 out of 69 years ended with a gain. That's 74%. So what that means is that in January, if you buy the stock market, by the end of the year, your chance of making money is 74%. Right? That's better than any casino in the world. People say that they're afraid that the market's going to go down, they're going to lose money, right? That's irrational fear, because the chance of that happening in any given year of the market going down is only 26%. But the chance of you getting a divorce and losing half your shit is 50%, right? The divorce rate is 50%. So why get married, right? It's a lot riskier than the stock market. So let's take a look at the next table and see what it tells us. So this table shows you the distribution of gains and losses in the market for the last 91 years, from 1928 to 2019. So you can see that the ones in green are times when the market made a gain, and the ones in red are times when markets made a loss. So you can see that the majority of the time, which is 19.7% of the time, 18% of the time, 23% of the time, the market is making substantial gains, right? So in fact, 23% of the time, the market gains 20 to 30% in a year, in a calendar year, right? 18% of the time, the market gains 10 to 20% in a year, and 19% of the time, it gains 0 to 10%. Of course, once in a while, you get a 40 to 50% gain in 1 year, happens 2%. 50 to 60% gains, happens 2%, right? But 12% of the time, you get a 30 to 40% gain in the market. Now, if you add that all together, that's about 77.3%, right? So you can see that 77% of the time, you're making a lot of money in the markets, right? Now, what's the chance of the market going down? Now, 13% of the time, the market drops between 0 to 10%. That's a small pullback, right? Now, 3% of the time, the market drops by 10 to 20%. Now, a lot of people are afraid of market crashes, right? When you think about market crash, it's like a 30%, 40% crash. Does that happen? Of course it happens, but how often does it happen, right? In the last 90 years, a 30 to 40% crash happens 2% of the time. In fact, it will happen twice in 91 years, right? And a 40 to 50% crash happens only 1% of the time. That happened 1 year in 1931, right? So if you add up all that red, it's about 22 point something percent, right? 22% of the time, the market will go down, but 77% of the time, the market's going up. So whenever you want to go short on the market, or you're bearish on the market, you're pessimistic, you're going against the long-term facts. You're going against the long-term trend of the market. All right. Let's look at the next table over here. Okay. Now, this is a history of bull markets and bear markets since 1935. So that's about let's see, again, over about 90 years, right? So you can see that these ones in blue are bull markets, and bull markets can last 13 years, 15 years, 6 years, 2.5 years, 12 years. Now, if you add up all the ones in blue, all right, the market has been in a bull market, which means going up 78 years since 1935. Now, if you look at the bear markets, those so-called crashes people are afraid of, right? This lasted 6 months, 1.5 years, almost 2 years, 3 months, 2 years, 1.3 years. If you add up all the ones in red, which are the crashes, that's 8 years since 1935. So again, notice that the market is in blue, or the market is in a bull market 91% of the time. So if you're afraid of a market crash, you're basically afraid of the 9%, and because of the fear of the 9%, you miss out on the 91% of the time that your wealth is growing. That doesn't make any sense, does it? So if you think about it, what Peter Lynch said many years ago is really true. Right? Peter Lynch is one of the greatest fund managers of all time. And he said this, he said, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. So what does this mean? You see, a lot of people are afraid of losing money from a stock market crash. But ironically, they are losing even more money by not being in the markets and missing out on the opportunity cost of building their fortune in the markets. And by keeping cash, they're actually losing even more money as currency devalues from inflation. You see, a lot of people have the perception that investing in the stock market is risky. Wrong. The riskiest thing that you can ever do for yourself and for your family is to not invest in the markets. The riskiest thing you can ever do is to keep all your savings in cash. Why? Because if you keep your savings in cash at a 2% inflation rate, it means your wealth, your money is losing 2% of its value every year. So that means in 20 years, your wealth would have dropped by roughly 40%. So by not investing, you're guaranteed to lose 40% of your wealth every 20 years. Now, if you invest in a stock market and if you just buy, for example, the Dow Jones Index ETF that returns about 10% a year, in 20 years at 10% a year, that compounds to roughly 572% returns. So the question is, would you rather lose 40% of your wealth every 20 years or have your wealth grow at 500% every 20 years? All right? Answer is pretty simple. So let's take a look at a chart of the S&P 500. And I'm going to show you why, again, for most investors, they lose more money anticipating a crash and not getting in than the crash itself. And you don't really actually lose money in a crash, because remember that the market will always go up higher eventually. And as long as you don't sell, you will never lose in a crash. The stock market's like a roller coaster. The only way to get hurt is if you jump off halfway during the ride. But if you stay in your seat and you strap in, you'll always reach the destination, which is a lot higher. Okay, anyway, so this is the S&P 500, and this is the last 10 years. This is 2010, and this is mid of 2020. So this is the S&P 500, right? You can see that 10 years ago, the S&P was roughly about 1,100 points over there. And today it's at 3,215 points. Now, in the last 10 years, did we have crashes? Yeah, of course we had crashes, right? We had, a little crash over here, we had a crash over there, a bigger crash over there, we had a crash over there, this was a bigger crash over there, and of course we had the COVID-19 crash, 36%, oh my God! But guess what? We are back here now, 3215. The roller coaster always goes high eventually, right? So again, people are so afraid of crashes, but crashes happen, right? But regardless of the crash, if you were invested 10 years ago from 1,000 points to 3,000 points, you would have tripled your money, right? Tripled your money. But unfortunately, most people would not have stayed for the ride and see their money triple, because they would have been freaked out somewhere along the way, or they never get in. Why? Well, let me show you all the news articles since 2010, right? Again, so that's 2010 over here. Check this out. In 2010, this was back in July 3rd, 2010. You can see that every year, people call for a crash every single year, right? So market forecast says take cover. And this guy, Mr. Preacher, said that we have entered a market decline of staggering proportions, perhaps the biggest of the last 300 years. And again, this was back in 2010. So reading that article, what happened? You're so afraid of the crash, you never get in, right? You don't get in and you miss your money growing triple, all right? And this was back in 2012. And again, another crash, right? Europe debt defaults are poised to rattle stocks. This was back in November 2012, another crash prediction, right? And then this was 2013. A US default seen as catastrophe dwarfing Lehman's fall. So you can see 2010, they say it's going to crash. 2012 is going to crash again. 2013 is going to crash again. And you can see another one over here. What does it say? 87% risk of stock crash by year end. Again, this was back in 2013. Again, well, market didn't crash, did it? Right? Okay. And again, Mr. Stockman, my favorite friend, right? This was back in 2015, right? Mr. Stockman said stocks and bonds will crash soon. And again, 2015, what happened, right? It didn't really crash, did it? Right? Maybe it went down a bit, but sure, it went a lot higher, right? And this was back in 2018, November. Why markets are still heading for a crash, right? So 2018, this is going to crash again, right? It crashed and went higher again. Okay, and then this was back in 2018. Stock markets facing a 2019 crash, 70% warning. 2019 markets went up 28%. So you can see that every bloody year people are calling for a crash. So if you're so afraid it's going to crash this year, 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 it's going to crash, it's going to crash this year, it's going to crash, you lose 300%, or rather not 300%, but you lose the opportunity of tripling your money because you're afraid of these crashes that will happen from time to time. All right, so hope you've enjoyed this educational video, and really the message at the end of the day is this: the only thing to fear is fear itself, and fear is nothing but a false experience appearing real. If you want to succeed in life, if you want to build your fortune, whether in business, in the markets, you have to overcome this irrational fear and look at the facts, look at the logic, and invest in great companies, invest in the index, because over time, they will always increase in value. So this is Adam Khoo. I hope you enjoyed this video. May the markets be with you. If you want to find out more, do subscribe to this channel or check out my website, piranhaprofits.com. See you soon. So if you want to be the first to get my next video on YouTube, do click the subscribe button right now. If you want to check out my online courses, go on to piranhaprofits.com, where you can enroll in our professional Forex, stock trading, options trading, and value momentum investing courses, where you're going to learn how to trade like a professional and generate an income anywhere in the world. If you would like to come to Singapore to attend my live classes, Wealth Academy, go on to wealthacademyglobal.com. It's Adam Khoo, and may the markets be with you.